It's Rand on Real Estate with Greg Rand.
Rand, I'm your host, Rand on Real Estate on 77 WABC. I'm here with Laura Smith, my co-host. How are you?
Great to be with you once again.
Yep, glad to be here with you. So we have a great show on tap for you today. We're going to be talking about freedom and the pursuit of happiness. This is a show, as you know, about capitalism and entrepreneurship, regardless of the economy, regardless of the recession. How do you go out there and take care of yourself, take care of your family, pursue whatever your dreams are? And we focus obviously on real estate here, but real estate is just the business that I know best. So you can apply this to other things if you're an entrepreneur, if you're wired like I am to want more out of life and do it yourself. Well, maybe there's other ways you can do it, but I'm going to teach you how to do it with real estate because maybe you don't have a plan. I'm going to show you a plan that can work for you. We're going to look around and take some lessons from world events that are in the headlines this week, talk a little bit about current events and try to tie them in with how to accomplish great things for yourself. We're going to take your calls. One of the things we're going to focus on today is some of the things that hold people back from investing in real estate. And I don't mean just now in this particular economy. I mean in general. I've been in this business my whole life, and I hear, and I'll share some research data with you, that there are a lot of people out there. Chances are, wherever you are right now, if you look around, the people around you have thought about it. They've dreamt about it. They've talked to their spouse or significant other about it, but they haven't done anything about it. And there are reasons, and we did a survey, and I'm going to share with you the top 3 reasons. And I want to hear your reasons. So give us a call. The number here is 800-848-WABC. That's 800-848-9222. And talk about whatever you want. But if specifically, I want to hear from people who maybe have thought about making an investment in real estate. Maybe you've noticed there's a housing crisis. Have you noticed there's a housing crisis going on, Laura?
I think I heard something to that effect.
Some whispers out there about that, right? It's been going on for a few years now, and it's kind of the driver of this whole economic recession. But you know what? The flip side of this crisis is an opportunity that's unprecedented since the Great Depression. In fact, my book is out this week. I'm really excited about that.
Congratulations.
Yeah, my book is called Crash Boom, and it is a study of the Great Depression and the similarities of the Great Depression with today's recession. And what you're going to see, what I found through the research that I did, was there are some striking similarities. They're very, very tied into human nature and people's behavior and people's confidence, overconfidence, which turns to underconfidence. But at the end of the day, what I learned, and it changed me, was the fact that after the Great Depression, that was a massive overcorrection in real estate values, and it's happening again right now. So the reason why I started a new company called Own America, my website is ownamerica.com. I'm looking to teach the world how to do real estate right in America. And the reason I say that is that I wouldn't have believed, Laura, if you bet me 10 years ago, if 11 million people would have screwed up ownership of real estate in America, I wouldn't have believed it because it was so easy. It was simple. The variables weren't so wild. You know, you bought something, you moved into it or you rented it out, you held on to it for a long time and it worked. But every time you introduce these new crazy variables of no money down, hyper leverage, buying and flipping, all that kind of crazy stuff. Well, all of a sudden we have a lot of people out there whose expectations were wrong. Those expectations were not met. And now a lot of people are scared off of real estate. And I'm trying to remedy that because it really is a great way to build wealth long term. It's a great business for you to start on the side. And so ownamerica.com is a place where we offer training to investors. We offer training to real estate professionals who want to learn this business and be able to share it with their clients. And we have Crash Boom on sale there now, also available on Amazon. So grab a copy of that because it's not that long. You know, it took me 2 years to write, but it's only 200 pages. I just didn't have any more than that in me, it turned out. So,
well, you're a busy guy.
Yeah, I guess, yeah. But I'm really proud of it. I'm excited about it. And I think that probably the coolest part of the book, the part that I enjoyed the most, was the research about the Depression, where after I had read whatever I could find on the subject, you pretty much figure out pretty quickly that the historians nailed down the timelines. They nailed down what happened, and there's a couple of opinions of why different things happened. But you read the historical record, and you can do that in 15 minutes on Wikipedia. And I went and bought a bunch of books and read them, and it was all the same stuff. But it was the interviews that I did, and we've actually had some of those interviews here on the air, people who lived through it. Mm-hmm. People who are in their 90s right now and lived through the Great Depression, and really inspiring stories. And I put a few of them in the book that were especially inspiring because they bucked the trend. They had a great childhood during the Great Depression. How could that be, right? But they did, and their stories are in there, and I may share a little bit about that, one of those with you later on today. But first, I want to focus on what's happening out there in the news. I just found it so fascinating that if you turn on the TV right now, pick a channel, doesn't matter, you're going to see something going on the TV, and it's a protest. Okay, mm-hmm. There's protests going on everywhere right now, and they kind of fall into two categories, right? You've got the people overseas who are protesting because they want freedom. They want freedom, okay, and it's spreading like wildfire out there. In fact, I shouldn't use the analogy wildfire because they are actually on fire, a lot of these cities right now. People are willing to risk everything. They're willing to stare down the barrel of a gun from their own army because they've had it. They're fed up. Like the Libyan thing was really striking because I remember when I was in high school when the first time I heard the name Muammar Gaddafi was when we were having trouble with him back in the 1980s. And you think about that. We went through 2 terms of Ronald Reagan, 1 term of George Bush Sr., 2 terms of Bill Clinton, 2 terms of George Bush Jr., and now we're in the first term of Barack Obama, and they still are stuck with Gaddafi over there. Mm-hmm. You know, like my entire life, they've had the same guy running the show over there, and he's not a good guy. And all they want is what we have. That's what strikes me. All they want is what we have. You see young people over there who, I guess because of the internet and because of media and because now they can see what life could actually be like if they just didn't have a dictator running their country and they had the right to elect their own leaders and pursue happiness. Because that to me is the most powerful thing about why I think our country works so well. And some people will probably call and say, our country doesn't work well, our country stinks. Well, I don't think so. I think our country works really well, warts and all. It's the pursuit of happiness that's the thing, you know, life, liberty, and the pursuit of happiness. I feel like when I first heard that and it first struck me, it was years ago, and I remember thinking, serious people would think the pursuit of happiness is frivolous, right? Pursuit of happiness. What is that? Running around in a garden and singing and dancing? That's not serious stuff. That's mamby-pamby. That's not what responsible adults should be trying to do. On the contrary, the pursuit of happiness, it's what makes your life and makes this experience in this country great. You know, it reminds me of you hear a lot of people who try to tell you that you're supposed to be focused on taking care of other people. Okay, we're supposed to be worried about other people, and I am, and we all are. Okay, everybody, you have compassion for other people, but you're supposed to take care of yourself first. Okay, it's like on the airplane. When you get on the airplane, they tell you if the oxygen goes bad or whatever, and that little oxygen mask pops down, they tell you put yours on first, then take care of the person next to you if they need your help. Right.
Right.
Same thing in life. So here we see across the globe, especially in the Middle East, you've got major protests going on, and they want freedom, and then you got protests in this country. And they want something different. They've got what the other guys and gals want. What they want here is benefits. They want power. And I know that I'm going to make some people mad. This kind of thing makes it sound like I'm going up against the unions in the conversation, but I'm not. The thing that I'm drawing from this is that those protests are full of a bunch of people who are being let down because they thought they were secured. They thought that their compensation, their benefits, and their retirement pensions were secured, and it turns out that it's not. It's just another example of anybody who depends on the government, anybody who depends on their employer, anybody who depends, in this case, on their union to negotiate a package for them. You look around you, and what do you see? People who thought they could rely on something, and it turns out they can't. And I want people in this country to remember that we have what people across the globe are fighting and are willing to die for. We have the ability to go start a business, right? To live where we want to live, to move if we don't like it, okay? To read what we want to read, to watch what we want to watch, to try to be whatever it is that we want to try to be. And so how do you buck a negative economy? How do you deal with the fact that if it turns out that you are a public employee union who now you thought that you had, after 20 years of working hard, a pension secured, and now you find out maybe you don't. Maybe this whole tide of renegotiating pension deals is going to wind up affecting you. What do? You know, it's not your fault. I want the best deal I can get, okay? So if somebody's willing to negotiate on my behalf collectively and I get a great deal, whatever it is I want it, someone wants to take it away from me, I'm going to fight to keep what I've got coming to me. But at the end of the day, they don't necessarily have it coming to them. And so the message is, what you do have is the freedom to choose your own path. What you do have is the ability to start thinking about taking care of yourself which obviously you're doing. You're going to work every day. But taking care of yourself, realizing that what you have, the best thing you have going for you is your own ability to go out and make something happen out of nothing. So we're going to focus on that. I want to take some calls. I want you to give us a call here at 800-848-WABC. Tell me if you think I'm wrong. Tell me if you think I'm right. I like it better if you tell me you think I'm wrong because it's more fun to debate these things than it is to agree. But also give me a call and let's talk about a business plan for you. Have you thought about it? What's holding you back? How can I help you get this plan bulletproofed? How can I help you find diamonds in the rough? Let's get out there and make it happen. This is Greg Rand. You're listening to Rand on Real Estate on 77 WABC. We'll be back in a minute. All right, welcome back to Rand on Real Estate. I'm Greg Rand, your host on 77 WABC and WABCRadio.com. My website is ownamerica.com, and that's a place that's all about learning the craft of becoming wealthy as a real estate investor. And you know what? I guess I started something here. I got a bunch of calls coming in with people who have things to say about my conversation about the protests going on across the world. So let's jump in with that right now. Actually, what we're going to do here is if we get some calls that I can find a way to relate them to real estate, we're going to give away a copy or two of Crash Boom today.
Your brand new book, hot off the press.
Hot off the press, available at Amazon.com. Let's go to Pennsylvania. Bob, how you doing, Bob?
Such a pleasure to talk to you today. I first need to say and preface my comments by saying that my family, all the way back to the supporting Goldwater days, are strict Republicans, but I am a retired teacher after 35 years who has worked with handicapped children my entire life. And it's getting a little ridiculous with how I'm so dependent on the government at this time, because those statements irk me because of the sacrifice that myself and my family and my kids have gone through so that I could work with handicapped kids for over 35 years. I knew going in that, to be quite honest with you, at the end I would be receiving some kind of a pension at some type of security, but I just think, and I'm not 100% with a lot of these unions and things that are going on with Wisconsin, but I just take umbrage with that I'm on the take, so to speak, from the government.
Right, I hear you. And you know what? I know that gets thrown around a lot. There are people out there, Bob, you might agree, that are dependent on the government, who do look to the government to take care of them. When I talked about union members being dependent on their pensions, maybe I was lumping things in, okay? But my point here mainly is the fact that, okay, 35 years, I commend you, especially doing God's work and working with handicapped kids. Do you think you're actually in danger right now of having your pension being somehow taken down, taken away, watered down, diminished or something? Is that a possibility for you?
Absolutely. And again, this relates to the topic really of your show in terms of real estate or investment or whatever. My wife and I have painstakingly sacrificed and saved for all of these years. I was a New York teacher, and I had to put my pennies together and retire and move out of state from affordability reasons. And you bet I am really scared about 35 years of service, moving, my wife out of our home state where our kids live or whatever, just to be able to live. And now that pension is going to be in jeopardy right now, especially because of the things that are going on in the country.
All right, so there are two things in play. One is that you get tired of hearing people say flippantly about people having dependency on the government, and you have a point there. And the other one is the fact that I'm trying to draw attention to the fact that, I think if you're 35 years in, I haven't heard anybody propose anything that would mess around with somebody who's that far into it, who's that close to retirement. I hear them talking about doing things to change the system for the next generation, et cetera. But maybe I'm missing something. But the overarching point here, Bob, is that if you're after 35 years of sacrificing, scrimping and saving and moving your family to a place where you could afford because you weren't paid all that well as a teacher for a lot of years, if at the end of that whole chain of events you're actually in jeopardy, that's kind of my point, is that you've put so much into this, and at the end of it all, you have to lay awake at night worrying whether it's going to come through or not. And that's my point. I want to catch the guy who's 35 years behind you, Bob, who is making plans right now, trying to figure out how to secure their future. And I'm trying to get him into the mindset that says, I better figure out something else because I can't depend on anything else but myself. because you just never know. You see my point?
Exactly, and that's a great point. And even recently, within different contracts that I worked on and with through the unions for myself before I had retired, there were no pay raises, or there was very minuscule 1.5%, 1.75%, when the cost of living index was 3.75%.
Right.
And we had negotiated some 5, 6, and 7 years ago. And even during the times of the Clinton administration, who, by the way, I was not a fan of, but even as a teacher, believe it or not, even during that administration, I mean, I didn't see pay raises for 5 and 6 years, and when I did, they were stripped away from taxation, or by taxation, I should say.
Right.
So all of these things have transpired for so many years now, and I think that there needs to be some type of voice, and I'm a Fox News and WABC advocate, with every one of them, from Rush Limbaugh to Sean and everyone else. But I got to say one thing: it's getting a little bit twisted, where these people, there needs to be some appreciation for the dedication that they've made or are making now, and that people need to know that.
Yep, you know what? And I think I'm glad you said that. And I thank you for your call, Bob. I think a lot of people do appreciate. You wind up getting caught up sometimes in the back and forth in these debates, but everyone does need to remember that we've got a lot of hardworking people out there who are being affected by this. But again, it ties into my original point that, real quick, Bob, if you're still there, do you own the home that you live in, Bob?
Yes, I do.
Okay. Did you buy any other real estate along the way?
Did I buy, excuse me?
Did you buy any other real estate along the way, or is it just the house you live in?
I'm sorry, I didn't have that much money to do that.
Okay. But you know what? That house is probably one of the reasons why you're going to be secure when this all goes down, because you've got that going for you, right? Well,
unfortunately, with the decline of the housing market, my house actually right now is not worth what I paid for it. So I'm like many other Americans, where 5 years ago when I purchased the house and I was living part-time in it, and then I retired 2 years ago and had to move here, the price, the housing industry in 2005 was a lot different than now. So right. I'm like many Americans right now. What my house is worth right now, if I wanted to sell it, I couldn't. I couldn't even afford to sell it at this point.
Okay.
And so when you talk about a pension or income that comes in to afford that house, it is really right now a very tense moment, for my wife and I as current retirees.
All right. Well, you know what? I wish you a lot of luck. I appreciate the call. When you get off the line, talk to Adam and give him your address. We'll send you a copy of the book, just because you were a great sport, and I think your call represented the way a lot of people feel out there, which is, hey, I'm a good citizen. Don't make me feel like a bad guy. I've worked hard my whole life. So thank you, Bob.
That was a great call.
It was. We've got somebody here from Westchester. Trish has a real estate. We don't have time for a real estate.
Yeah, why
question.
don't we just, when we come back?
Okay, so Trish, hang on a second. We're going to come back in about a minute. I'm going long here. This is Greg Rand on Real Estate, 77 WABC. Back in a minute or two. Okay, we're back. This is Rand on Real Estate. I'm Greg Rand, your host on 77 WABC and WABCRadio.com. My website is ownamerica.com, because you can own a little slice of America and get wealthy as a result. Trish, you've been hanging on through the break. I appreciate it. Trish from Westchester, how are you?
Thank you. I'm fine. I want to make sure before I make a remark and ask my question that I heard you correctly when I tuned in. Did I hear you say that you believe that the real estate market is overcorrected?
That's correct.
Okay, good. I'm glad that I was correct in what I heard. I started investing in the market. I'm in the Westchester Putnam area about 20 years ago, and then subsequent to that, I actually went and I have an associate broker's license. It's my observation that the market is grossly overcorrected, and I think unfortunately some of it is due to government programs, and also it's kind of agent-driven. Okay. And I was very, very curious to hear, since you and I share the same opinion, you're the first person I've heard say this, why you believe the market is so overcorrected.
Okay, I'm glad you asked. There's a few reasons. One is that if you look at a long-term chart depicting the housing cycle, and by the way, you can do that if you go to ownamerica.com, where we have a course for investors that we're launching in April. But I'm giving away the first class for free, just because I can't help myself. I want people to see this. And the first one is on the housing cycle. And I show several cycles kind of one after the other. And you see this very deliberate, consistent, gradual upward trajectory going back to like World War I. Okay. And And then all of a sudden you see these anomalies. You see these blips where they go up too high and then they inevitably come back down again and correct. When you see the way it went in what I call the roaring 2000s, right, the decade we just wrapped up, you see that chart and you know something was wrong. I mean, even if you looked at it in 2006 before anything went bad, you would know that something was going to go bad because this thing just looks like a ski jump at the end, okay? A nice, long, gradual trajectory with a ski jump at the end. Now you see it, and it looks like a big, just a bump, okay? It goes up and it comes back down again, but it's come back down further. You can see the trending, it's unmistakable, further than it should have. Why is it doing that? Well, for one thing, the prices definitely went too high because you mentioned the government policy on no money down loans to anybody with a signature. Okay, that drove a lot of people out there into the marketplace with what we call fanny money, like funny money, but fanny money, a no money down check in their pocket where they were basically not working with their own money. And so, you know the deal. They see a house, it's on the market for $500,000. They've got a check for $525,000. Somebody else offers $500,000. They go, okay, well, I'll pay $525,000 because I have a blank check for $525,000 in my pocket. That driving of the prices too high caused it to correct harder. And now we have the impact of the Great Recession driving it down deeper. You have the impact of this unprecedented number of defaulting and foreclosing loans that banks take properties off the market. Banks take properties back for people who don't pay the loans, and they put them on the market. And typically they put them on with what they call 60-day prices, meaning we want this thing sold in 60 days. Now, if the market is absorbing listings, absorbing sales, meaning you put a house on the market and it's taking an average of 120 days to sell. If you want to get it unloaded in 60 days, there's only one way to do that. And it ain't marketing, okay? It's pricing. So when you say, I want to get this thing done in 60 days, you're going to price it a little bit lower to get it to move. The national impact of that and the local impact of that is that bank-owned properties, distressed sales, things called short sales that you're probably familiar with, where somebody who's selling the home, they owe more than the home is worth, and they negotiate with the bank to let the bank will forgive some of their debt in order to get the place unloaded. All of those factors cause properties to be sold under market, okay? So you've got a couple of forces happening at the same time. One, too much upward pressure caused a reaction of too much downward pressure. Layered on top of that is the foreclosure and short sale crisis. And if you look at it on the chart, you can see that we're back in most parts of the U.S., we're back to about 2001 prices right now, which means the entire decade is practically erased in terms of that bubble. It's all gone. Now, we noticed in the market that around 2004, buyers were starting to get a little bit squeamish with the way the prices were escalating. And we said, as analysts in the business, we said, okay, something's going on. The marketplace is speaking. The buyers are getting more cautious. Let's put a mark on this chart of 2004 because anything that goes higher than this, we're starting to think might be momentum driven, not real, not market forces, but just momentum forces. So we thought it was going to come back to 2004 levels. And as soon as it got down below 2004, we started talking about an overcorrection. And now that we're at 2001, to me, it's unmistakable. And then you take all that and compare it to the end of the Great Depression, which set us up for 75 straight years of appreciation, or 7 straight decades, a little bit, a couple of bumps along the way, but 7 straight decades after the Great Depression, tied all together, and what you have is an overcorrection. Does that make sense? Trish?
I hooked up, but I haven't looked at it yet, but I'm going to go back into it and go through what you suggested.
Yeah, I'm not stating this lightly. It really, I've given you a lot of things. I kind of dumped a lot of information on you just now.
No, I appreciate that because actually when I made the remark that I thought some of this is government-driven and even agent-driven, I was referring to today. I thought the government, is just coming out with too many programs. Agents are jumping on top of it. They're trying to push a property that has no distress whatsoever attached to it for a quick sale. And from where I'm standing, and I've observed a lot of what you've said, but where I'm standing, there's I'll say it politely, there's a little bit too much manipulation. Prices really should be higher than what some things are selling for today.
I think you're right. I think manipulation is a good way to put it. When the government tried to help, for example, last year by putting a tax credit in place, and now we can't tell if we're recovering because what are you comparing it to? You're comparing it to an artificial number last year. Very hard to see if the momentum is moving in the right direction. I can feel momentum in the right direction. Another great example is that when you're in New York, the metro area here, a little bit hard to gauge But when you go and look in the places where the foreclosure crisis hit first and hit hardest, California, Nevada, Arizona, Florida, okay? Those places right now, the reports coming in are that more than half of the sales this year so far in those states are all cash investors, okay? Investors are jumping all over these things. Now, when you see investors flocking to a market like that with real money and not leveraged money, not bank money, a blank check in the back pocket. We're talking about going in with all cash to scoop properties up with that kind of, and those kinds of numbers, 50%, 60% of the sales in Las Vegas right now, all cash investors. That's an indicator of somebody at least out there thinking the market overcorrected and there's a short-term upside as the market maybe bounces off the bottom. So, it's important to note here that everything I'm talking about is in the context of a slow-moving behemoth. This market is not like Wall Street. It doesn't bounce around, okay? It trends, and it's slow. So when I say now is a phenomenal opportunity, I mean now, next year, the year after, okay? We're going to be in a position you could take your time, in other words, Laura.
Well, because I had a question about that. My own personal situation is I have a house in Westchester that is worth less than what I bought it for. Apparently, it dropped by $50,000 or something. And I'm thinking of moving into New York City, but they say that right now prices could not be better in New York City. So what is your advice to somebody who's going to be losing money on their original investment, but being able to take advantage of what's going on right now?
My general advice is don't sell now if you can help it. I mean, if you need the money to be able to buy the next thing, that's a different story. But if you're selling in Westchester County and buying in New York tends to lead the suburbs. So whatever's happening here is going to happen in Westchester next. So if you see, for example, if Manhattan is taking a little bit of a jump up, okay, the demand because of this, the supply and demand in Manhattan is just so lopsided. There's just only that much of it around. It's a very small island, and the whole world wants to live here. So the supply-demand curve says that this market went into the meat grinder last, came out first, and is recovering first. But you still have the opportunity because Westchester is just a half a second behind it. Whatever you give up down there, you're going to gain over here in the same kind of percentages. So if you're selling for 5% less than you would have gotten a year ago, you're going to get 5% better, roughly, than you would have gotten a year ago down here in Manhattan. But if you're buying something more expensive, that 5% amounts to a larger dollar figure. Does that make sense? If you're if you're selling and buying at the same time, it's a wash. That's the point.
It's a wash.
Yeah.
Okay, so hang on to what you have, maybe lease to buy something in the city?
I'm all about accumulating real estate. I never sold anything. I couldn't even tell you what it's like to sell a piece of real estate. Haven't done it yet. Okay. I wait until I can hold on to these things, and I don't buy the next one until I can afford to buy the next one while keeping the last one, with the exception of the home that I'm living in. I'll trade up in that situation. But
so I'd have to rent where I am in order to rent in the city.
Or if you sell, you're neutral because you're doing it at the same time.
Okay.
Thank you, Trish, for the call, and I hope you go to the site because we put a lot of energy into going and compiling those stats because everyone knows the housing market cycles. But where do you see the cycle? Where can you actually go and look at it? OwnAmerica.com has that now, and we're developing more features that are going to be released all throughout this year that allow you to do that kind of analysis on individual counties and cities and just look at the cycle because you get it. You can take a deep breath because you know what's coming next. When you see it happen over and over and over again, it's like as cold as it is right now, we know that it's going to warm up pretty soon, right? Because that's the way the cycle goes.
Okay.
All right. We have a break coming, or we have time for another call?
No, we're going to take a real short one and be right back with more calls. This is great education. Thanks, Greg. Wow.
Okay, back in a minute. Okay, welcome back to Rand on Real Estate. I'm Greg Rand, your host on 77 WABC. We're here at the Small Business Authority studio in New York, also on WABCRadio.com. My website is ownamerica.com. I have a book there called Crash Boom. That
brand new book. Play
just
it up.
Literally on the truck on the way to the bookstore as we speak. But Amazon's already got it, and I'm certain it's going to be a bestseller. No, I'm not, but I think you'll like it if you buy it. And I wanted to talk. You know what? We have a call here from Staten Island, Max from Staten Island, who's asking a really good question. Max, how are you? Max, you there? Hey, okay, I see you now. How are you?
How's it going, Rand?
It's going good, man. So what's your question about being a landlord, right?
Yeah, well, I mean, I got the same mindset as you as accumulating, accumulating real estate. and the current property I'm in now. I mean, I'm married. I just had my second child, and I want.
Congratulations.
Yeah, thank you. I guess I don't even want to trade up. I just want to buy another home and keep the house I'm in now. I mean, it's a two-family, and it's a nice rental income every month. I do have a note on it, but the amount of money that I'll make every month, it's above and beyond the amount I have to pay to the mortgage company, which is good.
That's awesome.
But my only worry is that, okay, I go and I extend myself and I buy another home, and now I rent this existing home and the tenants don't pay, or you know, because I've had family members in the past that have tried to branch out and buy multi-family rental income, and they've been burned. So how do you protect yourself? That's
a great question. And you know what? It's funny you say it, because I was on the Fox Business Network this week. I go on the Varney and Company show every so often, and they asked the same question. They said, what about a deadbeat tenant? How do you get rid of a tenant? They can live in the property, you can't evict them, etc. And I actually kind of teased them. I said, you guys are such Wall Street guys. You don't want to get your hands dirty. You don't want to actually do anything. You just want to buy paper and trade paper. But it's a legitimate question, and most of the protection you can give yourself is up front, okay? Credit check. Real simple thing, okay? When you get a tenant for a piece of real estate, this is why it's worthwhile to pay a commission to a good real estate agent in this situation, because, number one, they're going to tell you what you should be charging, and they'll prove it to you by showing you what's on the market now. But also, they've got the ability to run a credit check. And tell you, man, it is the greatest way to know if somebody has paid their bills up until they met you. They're going to pay you. Okay, if they have a hardship, they lose a job, that's a different situation. But if they are the kind of people that have a good credit score, 680 or better, they pay their bills. And the best way to see the evidence of that is that right now we have we have a foreclosure crisis due to one basic fact, and that is that the lending standards, they were giving people mortgages who didn't have as good a credit score as they used to have, okay? Or they used to require, in other words. So as soon as you let somebody who has a poor credit history borrow money, you can guarantee that person is a higher percentage of those people are not going to pay you back. Same thing as a landlord. So you do a credit check. Look them up. Okay, do a Google search. I did this once on somebody who was going to be a tenant at a property I own. Guess what I found? I found on the second page in the Google search for their name that they were named in a lawsuit where they were being sued by a previous landlord. Now, that's kind of an unusual case, but I pretty much ran screaming from that situation, right? If they're in a lawsuit right now, they're going to be in a lawsuit with me later on, so that was out of it. You take a security deposit up front. Okay, that gives you a little bit of a cushion, but probably more than anything else, the relationship really matters, okay? If you meet your tenants up front, you have a conversation with them. It's really funny, Max, a lot of people say this. I mentioned earlier in the show that we did a survey at ownamerica.com where we asked people, if you believe in real estate, why don't you invest? The number one answer was, I don't know how, which is why I started Own America, to teach people how. But the number two answer was, I don't want to be a landlord. It's a hassle, it's a pain in the neck, deadbeat tenants and all that stuff. But it's like this. If somebody was opening up a restaurant, Max, and they said, I'm opening up a restaurant, but you know what I hate? I hate people who won't cook for themselves. Right? Or I'm a personal trainer and I'm opening my own gym, but you know what I can't stand? I'm disgusted by fat people. Right? You'd say, you're in the wrong business. All right? These are your customers. If it were for people that are out of shape, there'd be no reason to hire a personal trainer. If there weren't for people who didn't want to cook for themselves, there'd be no reason to go to a restaurant. You have to look at a real estate ownership as a small business. You have to view it in a long-term context, and you have to view your tenant as somebody who you love, okay? They're your only client. You own a business. It's an asset that they pay you rent. They are your only customer. You got to take really good care of them. And that is another way where if they like you, you have a good relationship, you do your homework up front, that's the best protection you could have. Is that making sense, Max?
Yeah, that makes sense. I mean, actually, my wife is set against it, but I'm for it, actually. But I guess in today's day and age where they're not going to be handing out mortgages as easily, it's probably better to be a landlord now because more people are going to be renting. Yep,
absolutely. And thank you for the call, Max. I appreciate it. And you know what? Take your time, okay? Get your wife comfortable with it. But I'll tell you something, multifamilies in the boroughs are a fantastic investment long term. So take your time, do it right. And listen, you just had another kid. Congratulations on that. Think about the real estate investment as a college fund for the child. That'll get you in the right mindset to be thinking long term. And when the phone call comes in because the toilet's overflowing, you're not going to be as annoyed by that phone call because you're going to think of your little baby and say, okay, this one's for him or for her.
Can you do a 30-second answer on Howard or no?
I'm going to try.
How quick are you?
Howard from New Jersey, how are you?
Fine, thank you, man. How are you?
Okay, I got
30 seconds.
Laura's going to kill me if I don't do this quick. What's your question, Howard?
Real quickly, we own 4 houses, 3 of which are rentals. all in adult communities. The problem is, how do you buy additional properties with stated income, which has gone by the wayside, and because of our write-offs, our gross is reduced down to a very low amount that the banks won't accept the income tax return as warrants a first mortgage. So I can't either refi and I can't get a first, primarily because the gross is reduced down to $3,000, $4,000, or $5,000 due to the write-offs of the 4 houses.
Yep, I got you. Bottom line, Howard, and I appreciate the call, you have to put down 50%, and you have to go to a community bank who believes in the community and will judge you as a landlord with experience. But you have to put down a whopping down payment to be able to get financing these days. If you own other properties and your income tax returns are whittled down because of the expenses, basically a big down payment is a solution to that. So thanks for the call. And I guess we're wrapping it up.
I'm really proud of you. That was a quick drive-by. But remind people again, how can they find your book? Amazon.com?
Yes. Go to Amazon.com, or better yet, go to ownamerica.com. We have a series of things there, but the most important one, in addition to the book, is that we're offering a free class to people who want to learn the investment game. And it's very much about the housing cycle right now. That's where I start this process off. So go take a look at it. There's an opportunity for you to comment, talk to me, talk to each other. Get in the game, and I think you'll find that as your confidence builds, you'll be in a position to do something really life-changing for yourself and your family long-term.
Absolutely. And you know what? There was so much amazing information in this program, as all yours are, Greg, I have to say. Always check out our website because the podcasts are up there at WABCradio.com. Greg Rand has his own page. It's Rand on Real Estate. You can hear the show again or a specific segment where maybe your question was answered. It's all up there for you on our fabulous website.
Okay.
Yep.
Well, thank you very much for listening. This is Greg Rand, Rand on Real Estate on 77
When are you going to be back again?
I'm back here
like in 2 weeks?
2 Saturdays from now.
Two Saturdays, 4 p.m. It's a show you don't want to miss for sure. Thank you so much, Greg.
Thank you.
You're a joy.